So the website that we're going to use to do a lot of our analysis is called tradingview.com. Now, you may or may not be familiar. Oh, let me close this stuff, y'all. Trying to send the international package, but you may or may not be familiar with TradingView, but it really is a great platform when it comes to getting into the markets, understanding everything you need to know. So when you first get to TradingView, this is how the homepage will look. And just like any other website that you use for trading, you have to select which currency, which asset, which thing you're going to be trading. So you can click search and all of the currency pairs will come up. Or if you are into trading things like stock, futures, crypto, indices, bonds, you have all those options here as well. So we typically focus on currencies because that's what the foreign exchange market focuses on. And the currency that I'll use mainly in my sessions is Euro USD. So I'm just going to go ahead and scroll down to that. And then I'm going to click launch chart. Now, once you're going to get chart, again, if you have been a student in I Am Mastery Academy, you'll notice like, wow, this looks a lot like my harmonic scanner. This looks a lot like my Liberty scanner. And that's because I Am Academy's resources are actually fueled by TradingView. So TradingView is the company that actually sponsors I Am Mastery's Academy's trading platform. So everything that you could do there, you can do here. But the main difference is that instead of all of your indicators already being on your chart, you actually just have to select the indicators that you want. So you're working backwards and you're building out your strategy. Now, the foreign exchange market is open 24 hours a day, 5 days a week. On the weekends, it does not close. I mean, it does close. It closes Fridays at 5 p.m. and then it reopens Sunday at 5 p.m. So you have all of that time throughout the week to decide what is going to be the best trading time for you. Now, though the market is open all of this time, that doesn't mean that you should be trading all this time. I might encourage you to find a session that works for you and to trade within that session. Now, the 4 major sessions are going to be the New York session, which is from 8 a.m. to 5 p.m. And if you have more time in your day like me, I am unemployed, or I should say I'm self-employed. I'm an entrepreneur, so I can trade any time of the day. But for somebody, let's just say you may have kids or you may have a job where you're working during the day, you may want to trade in a different session like the Sydney session. Now, that session starts at 5 p.m. and it closes at 2 a.m. Now, the Sydney session is when the Australian banks are open. Sydney is, I believe, the capital or it's a city in Australia. That's when the Sydney banks are open, if you have more time during that time. The Tokyo session is active from 7 p.m. to 4 a.m. So again, you can have a full-time job. You can come home and have some time to trade between those hours, 7 p.m. and 4 a.m. And then there's the popular London session. London session starts at 3 a.m. and it's over at 12 p.m. Now, all of these things are within the interactive PowerPoint I sent you, or you can just do a simple Google search, what are the Forex market hours, and it'll let you know. Now, the reason why it's important to understand this is because if you're trading at a certain time, you're going to want to focus on a currency pair that is going to be moving within that session so that you can actually get your results. Now, what do I mean by that? Again, you'll notice that if we click currencies, there's all these different currencies. You have USD JPY, AUD USD, and it tells you exactly what it is: the Australian dollar versus the United States dollar, the United States dollar versus the Japanese dollar, and whichever currency pairs are in a session, again, they may move faster. So during the day, during the New York session, you may see a lot of movement between Euro USD. During the Japanese or Tokyo sessions, you may want to focus on JPY pairs like USD JPY, GBP JPY, Euro JPY, because that is when the banks are open. You're going to get a lot more traders and you're going to get a lot more movement in the market at that time. So it's just important to understand those things. Now, again, you can trade anything at any time, but if you want to see, and this is something you guys should write down, the market really focuses on trend. These are the 3 major things that we're actually going to talk about today. The market focuses on trend, it focuses on momentum, and it focuses on volume. And these are all things you need to understand when it comes to calculating your profits and how you're going to get there. So again, just to stay on basics, the market is calculated in pips, the same way that the weather is calculated in degrees, speed is calculated in miles per hour, right? The market is just measured in pips. So versus if you're trading HFX, you're only going to use the last 3 digits in the market. It can move a millipoint. You're still going to make a profit whether the market is above or below your entry. Now, when it comes to Forex, and the reason why it can be so, well, the reason why it is liquid and while it is profitable and why you can, I can't say make more money, but you have a different way to make money is to be able to calculate your pips versus what you're risking. So for example, right, and I'm just going to use some tools over here. These are a bunch of different things you can use, but for the most part, we're only going to be using horizontal lines to keep it simple. So let's just say I put a line right here. And I'll explain why in a second. And let's just say I put a line right here. Now, if the market has moved from here, right, to here, we're going to say that is an uptrend, right? The market is trending up. Now, to say what it is in pips, we can take this ruler tool and we would say from here to here, it tells you exactly that's 47 pips, right? 47 pips. That means that from this line to up here, the market has gone up 47 points. Now, when it comes to calculating your profit, that's important for you to understand how do I actually count and calculate my pips, because that is really what it comes down to. And what I really want you guys to take away, not just from today's lesson, but overall from trading, is that you don't need to chase the market and you don't need to get a million pips. All you need to do is increase your capital and focus on finding your edge. Your edge is what works for you in trading, right? Because what works for you may not work for me. And what works for me may not work for you. That's why I teach all styles, all indicators, so that you can find your edge. So this is how pips work, right? So let's say we're looking at Euro USD. And let's say the market is at 1, 3, 5, 4, 7, 8, right? First and foremost, you're always going to want to ignore the last digit, right? And this is important. So you guys, if you don't know or you are still confused about pips, you can write that down. Although this is the full price, you're going to want to write that down. And what this even means is that for every 1 euro, right, you're going to get $1.35 USD. Right? That's the current exchange rate. And that is what that means. For every $1, you're going to get $1.35. So the reason why you don't want to count this last digit, this is called the pipette. And it's just such a small, and pip literally stands for point in percentage. So it's such a small part that you really don't have to count it. What you're going to want to focus on most of the time are these 2 digits right here. So let me just erase this. So if the price is 1.35478, ignore the 8. Now, if the market goes up 10 pips, right? The market goes up 10 pips. Let's just say we got into Euro USD for a buy and the market went up 10 pips. 10 pips from where we're at right now will be 1.3557, whatever you want the last digit to be. Right? So you're only going to count the 2 digits before, 47 to 57. That's 10 pips. Right? Now, if the market was to go down 10 pips, it will be 1.3537 and whatever you want the last digit to be. Right? You can always keep it the same. You can change it up because it doesn't really matter. And the reason why this is important to understand is because when you're calculating your pips and calculating your risk, you need to know this, because if you mess up, you can really lose a lot of money or make a lot of money by accident. And we want to make a lot of money on purpose, right? So I'm going to go ahead and take these last digits off. And now we're going to talk a little bit about the lot size and why we should focus on getting more capital and not chasing 100 pips in the market, right? So once you start using MetaTrader for a lot, you'll notice once you go to enter your trade, you'll see different things. So you'll see 0.01, and we're only talking about currencies. We're not talking about indices or crypto or anything like that. If you're going to use 0.01 That's only 10 cents per pip, right? Let me clear this off the screen. And I really want to make this simple, but again, if you guys ever get confused, just let me know. So 0.01 is going to be equals to 10 cents per pip, right? 0.02 is going to be equal to 20 cents. And you guys can also find this information in your interactive study guide. That's going to be 20 cents per pip, right? 0.05 will be 50 cents per pip, just so that you guys can get it, to get an understanding of like, okay, I'm getting it. Cool. These are called micro lots. These are the smallest investments that you can make in the market. This is the smallest, 10 cents per pip. Now, if we went in for a buy, right, and this is how you actually calculate your profits and how you calculate your stop loss. It's not telling you where to put it. It's telling you how to calculate it. So if we went in for a buy and we said the market is going to, well, actually, let's look at the same trade that we saw over here, right? We said that this was 47 pips, right? Now, if we only use 10 cents in that trade, we would do 10 cents times 47 pips, and our profit would be $4 and $4.70, right? So yes, the market went up 47 points. That's amazing. If we use 20 cents per pip, we would do 20 cents times 47. I don't know, y'all. I'm gonna use my calculator, honestly. We're gonna do 47 times 20 cents, and that's gonna be $9.40 that we could have made if we would have just increased our lot size. Now, it starts to get interesting when you increase your lot size. So now let's look at 0.10, right? That's a different lot size. That's going to be $1 per pip, right? So in this same trade where somebody made $4.70, you could make $47 in that same exact trade just by increasing your risk, just like the person who uses $2, right, per pip. They're going to end up making $94 in this very same trade that somebody made $4.70, the same trade that somebody made $47. You can be making more money once you have enough money to increase your capital. Now it gets even better than that. We have a standard, and this is the big boy lot size, right? This is $10 per pip, right? So in this same trade, same move, where somebody made $4.70, somebody could be making $470, right? And then if somebody used 2.0, which is $20 per pip, somebody could be making $940, right? Because it's all based on lot size. It's all based on understanding how many pips are you forecasting that the market move and how much do you have to risk, right? Based on what you have in your account, how much can you actually risk in this trade to be able to make more money? So what we need to understand here is that it's really not about chasing the trade. It's about getting your pips up. Because let's just say your daily goal for the week is $500, right? Let's just say your daily goal for the week is $100, right? If you have the capital, right, and you're using $10 per pip, you only really need 10 pips to make $100, right? Sorry, y'all, I'm messing up. You need 10 pips to make $100, and to make $500, you would need 50 pips, right? You would need 50 pips times that to make $500, right? So that's really important to understand. And I'll leave this on the screen because if you're not familiar with pips or you still get confused, this is just something that you're really going to want to, well, I probably can't keep it up here, but this is probably really something that you're going to want to master and really want to understand, right? So I'm just going to do some examples, and I just want you guys, if possible, just to answer in the chat and let me know what the number would be, right? So let's just say we're looking at Euro USD, and let's just say the price was 1.63221. If I got into Euro USD, this trade, and I used a 20-cent lot size, and I wanted the market to go up 30 pips, right? 20-cent lot size and the market would go up 30 pips. Somebody tell me what number is 30 pips above this entry point. If this is our entry point, 1.73221, what is 30 pips above that? And it's okay if you're wrong. That's why we're here to learn and figure it out. 52. Okay, what would be the full number? Y'all doing it like it's HFX. Yep, correct. So Kayla said the number will be, if we were going up 30 pips and we got into this trade for a buy, our TP will be 1.73521. That's correct, because remember, we want to ignore the last digit and do 30 pips from here. Now, somebody tell me, what would our profit be, right? 30 pips times 20 cents. How much can we potentially make in that trade? $6. Exactly. Thank you, Spicy. Oh, welcome. Welcome. But yeah, so I'm gonna do one more example. Good job, guys. Good job, y'all. So we're gonna do the same thing. We're gonna do Euro USD, and this time we're gonna do $15 per pip, and the market is gonna go up 25 pips. No, it's gonna go down 25 pips from 1.73892, right? So somebody tell me, was 25 pips under this, what would our take profit be? And how much money will we make at $15 per pip? Just to make sure that you guys understand how to, $375. Okay, yes. And our TP would be 1.73642. Exactly. Right? Thank you, Spicy. Thank you, Kayla. James, is this making sense to you? If it's making sense, you can unmute yourself, or you can just drop a 777 in the chat, because this is the bread and butter of why we really need to learn this skill. We don't need a bunch of pips. We just need the capital. So if it makes sense, drop some sevens or let me know. And then we're going to move on. Okay, thank you, Kayla. Okay, Spicy, you seem to get it as well. I'm just checking in with Mr. Locks Unleashed to see if he got it, because I know he said he wasn't really familiar with this, but we're going to move on because it's pretty simple. Ignore the last digits, focus on those two, and then go from there. Oh, it's okay. Kayla, you about to start teaching classes? All right, perfect, y'all. So now we're gonna actually move on, because once we understand that, it's going to be less stress for us once we really get into the market. Because another thing, you don't have to be into a trade for 50 pips, because sometimes the market won't always do those big moves. Like we see, there's small moves. The market won't always do that. So let's just say you did want to get 50 pips in the trade. One thing I like about Forex is that you can enter a trade multiple times. Similarly with HFX, you can enter a trade multiple times. So if you wanted to get 50 pips in a week, right? I mean, 50 pips in a day, instead of getting in one move from here to 50 pips, you can get into one trade twice for 25 pips each. It's called twin trading. So you can still reach your pip amount without having to break your bank. So here we go. Let's move on. So I'm going to put this on a 15-minute time frame. Just in with me studying this for a while, I figured out personally that 15 minutes is a good, like, looking at the 15-minute chart is a good place to start your analysis, whether you want to be a scalper, which means you're getting in and out of the bag within the same session, right? You're done. It's quick. Or whether you are a swing trader or a position trader. This means that you may not see your profit for a couple of hours or even the next day, but that don't mean that it's not going to happen. But 15 minutes is a nice medium to do your analysis. So here we go. I need to make this a little smaller. All right. So the currency pair that we're going to be analyzing, just to catch you up spicy, is Euro USD. And we're just going to be looking at a simple strategy that really kind of confirms when we should get in the trade, when we should get out the trade. But first, we're going to talk a little bit about market structure. Again, we're always going to talk about market structure because the more you understand it and the more you can see it, the easier it'll be for you to come in here and do this on your own and for you to be profitable. So what we're always going to notice about the market, no matter which pair we decide we want to trade, is always going to be the same thing. We'll have places where there's a low, and then we'll see that there's a high. We'll see that there's another low, then we'll see that there's another high. Then there's another low, and there's another high. And the market is going to consistently be doing this pattern over and over and over and over again. Now, the three things, and this is the video I sent you guys last night, and the one that's actually premiering on YouTube right now, is that you need to be able to recognize the trend, right? All this stuff is just preliminary to you finding your entry point into you getting into the trade, right? It may seem like a lot of information, but it's quite simple the more you listen to it and the more you practice. Now, I'm going to focus on, let me see if I can, okay, I'll just look at this section right here. So for now, we're going to focus on this area. We're going to look at this area right here. Right, and we're going to turn this red because this is it's a selling trend. Now, when the market is selling, you're going to know it's selling by, it's a couple of different ways you can tell this. You can just look at the shape and you can see that the shape is going down. I always say, like, imagine you're on a roller coaster and this is the first drop. You can always visually spot the trend, whether you understand the technical terms or not. When the market is going down, you're literally going to see that it's going down, right? So that's the number one way that you can recognize it. It's visual. The second thing you're going to notice is that you're going to see more red candles than green candles, right? The market is composed of buyers and sellers. And at any given time, there's always going to be somebody buying and there's always going to be somebody selling because people enter and exit trades for different reasons. There's millions of traders in the world and nobody is thinking the same thing at the same time, unless you want a massive group session, right? A lot of people are not thinking the same thing at the same time. So people have their different reasons. So although this market is trending down and we see more red candles, what you'll also notice is that there'll be some green candles in here too, right? And this is just the other side just saying, I want to take the market this way. The sellers are saying, we want to continue to push the market down. The buyers are saying, we want to push the market up, even though it's clearly over time, it's a downtrend. So that's the second way. You'll notice more red candles than green candles. Just like when it's an uptrend, you'll notice more green candles than red candles. Now, the third thing, and this is a little bit more technical, but it's going to help you the most in the long run, is understanding the concept of higher highs, lower lows, lower highs, and lower lows, right? So let's just, again, we're focusing on this. We can see that this was a high, right? Then we see that the market dropped and it created a lower high, right? It's still higher than the lowest point, but it's lower than the previous high. Then the market drops, right? And it creates a lower high, right? And then this continues to happen. And that's how we are going to distinguish that this is a true downtrend, right? You see that these lower highs, look, then you have this high. Then you see the market dropped and then it created an even lower high. And then it created a lower high. So as the highs are getting lower, the lows are getting lower. So a downtrend is distinguished by the market creating lower highs and lower lows. And again, that's just the technical way to explain what is happening when the market is trending. But it's really going to be important once you guys start to say, okay, when should I enter this trade? Where should I set my TP? Where should I set my stop loss? I promise you, I'm not just talking to talk. These things are going to come in handy. So if we understand how to visually and technically identify a downtrend and it's making sense, just drop some sevens in the chat. Then I'm going to go to an uptrend. Then we're going to talk about breaking structure, because Again, all of this stuff is preliminary to helping you understand, when do I get into this trade? Why am I even in this trade in the first place? Where do I set my stop loss and where do I set my TP? Because that's what I noticed a lot of people in the sessions I've had this week have just been having issues with. So now we're going to move on to this section. And I'm going to just turn it green so we can know that we're focusing on a buy. Right? Now, again, a buy is just going to be the opposite of a sell. If you see that the market is going up, right, and think about the roller coaster going up, the anticipation is building, that's going to be the first way that you can spot a uptrend, right? It's clearly going up, right? Now, it's not going to be red candles that you see more of. It's going to be green candles. That's the second way. And the third way is going to be the market is creating higher highs, right? So let's start here. We can see that that was a high because this is the low. Then we see that we have a higher high. And then we have a higher low because it's still the low, but it's higher than the previous low. And then what happens? The next candle, we have a higher high. The very next candle, a higher high, higher high, higher high, higher high, right? So this is what's distinguishing the trend. Not only are there more green candles, not only can we actually see the slant that's happening, but we can visually see these higher highs and lower lows being created, right? And these are where most people are going to buy or sell because they can also see the same thing. That's really the only thing that a lot of traders have in common, is that they can identify what's on the chart, but their reasons for entering a trade are always going to be different. Just like people's reasons for getting stopped out or taken out of a trade is also going to be different, right? Because it's all based on where is your TP, right? Where is your stop loss? Your stop loss takes you out of the trade to prevent you from losing so much money. And your TP takes you out of the trade in profit, whether the market continues to go that way or not. You're securing your profits at a certain point by saying, I looked at this chart. I'm going to estimate that the market is going to go up at least 10 pips. I'm going to set my take profit 10 points above where I think it's going to be. And whether the market goes 30 points, 40 points, 50 points, 60 points, I've secured profit at this particular place. So you guys will notice when I post on my story, you'll see the little green bar to the left, which means my profit target was hit. I don't need a bunch of pips in the market. I need to make my daily goal and I need to get out. Occasionally, you'll see me post when my trades hit stop loss. This means that I want the market to take me out at a certain place if it does not go in my favor, right? So now we know a little bit more about market structure. The last and final way that the market can move is called ranging, trending, consolidation, zoning. Like, it's so many different ways. And that just means that it's not really distinguished by a clear up pattern or a clear down pattern, but it'll be going like this. Right now, it's always going to be going like this, but consolidation is going like this in a smaller zone. So we see it right there, right? We see the market was consolidating a little bit right there, right? We see even right here, the market was consolidating a little bit right there, right? There's pretty much equal green and red candles. It's not trending any which type of way. Now, this is cool once you get comfortable with trading and you want to trade within that zone, but most of the time you kind of want to stick to a market that's trending because you have a higher probability of increasing your wins and losses. So that's market structure 101, right? So now we're going to talk about support, resistance, entry points, and what happens when the market breaks structure. Because when the market breaks structure, that's actually a really a great way to know if the trend is changing, right? Because I also noticed that a lot of people struggle where it's like, if the market is going up, but it may be resistant a little bit, you don't know if you should keep buying, or you don't know if the market is going to turn around for a sell. And that could be really problematic, right? You can lose money by not knowing which way the market is going to go. So let's look at this right here. We're going to look at this little section right here. No, we can look at something else. We can look at, we can look at this section right here. Right? We're going to focus on this. So we can see that this market was ranging for a little bit. It was ranging for a little bit. And then what happened with this green candle right here? The market broke structure. Now, market structure, again, it could be trending up, it could be trending down, it could be consolidating. When you see that the market breaks structure on the upside, and you guys can really write this down, right? And it only will take one candle, this green candle right here. We see the market was ranging, right? Then we see that this big green candle broke the structure, right? It created a new higher high, and then the market continued to push upwards, right? If you guys can see that, just drop some threes in the chat, right? So we see the market was trending and rangy. We didn't know which way the market was going to go. The market broke structure on the upside, and then the market continued to buy, right? A break of structure is going to be, once you find your edge, that's going to be one of your entry signals, right? Is the market continuing to consolidate, or has it actually chosen a side? Now let's look at what happened right next to it. We see that the market was ranging for a while. And then what happened? The market broke structure on the downside, and then the market continued to sell, right? So a break of structure, meaning the market is no longer consolidating, is no longer having, and these are called equal highs, right? Equal highs mean you'll see a bunch of wicks in the same area. Equal highs, you'll see a bunch of wicks in the same area. Then you'll see the market break structure. So that's two indications that you have for the sell. You have all these equal highs telling you that price tried to go higher, resist it. It tried to go higher, resist it. It tried to go higher, resist it. It tried to go higher, resist it. And as long as you can see this happening at least 3 times, you'll know that the market may be about to turn around and go the other way, right? So how we would have known if hold on. Right here. So how we would have known that the market was going to break structure, we would have said, okay, the market is consolidating right there. We would have saw the market was ranging on this candle. Let me pause it. And then go back. Sorry, y'all. Yes, exit. So we would have saw that the market was ranging in this area, broke structure on the downside, and then it continued to sell. Just like the market was, we could see the same thing happening right here. The market was trending, right? And I'll just draw the lines just so it's easy for you guys to see. We'll see the market was trending, right? It couldn't pick a side. It couldn't pick a side. Then we see that with this green candle, the market broke structure, and then we have this buy, right? So I really hope that makes sense. Now, when you first log into your trading view, the first thing you're going to want to do before you just enter a trade, right? This is not binary options. You do need to take at least 5 to 10 minutes to really mark up your charts and see what do you actually see on your chart. So hold on, let me just make sure this is right. Hold up. So you want to get your horizontal lines, and you really want to focus on setting up the market structure. All these tools are just used for you to take notes on what you're looking at. Like, what am I looking at? So we can see that clearly this is a high, right? We can see that the market is having a hard time getting past that high, right? So we would want to put a line right there because we're focusing on what's currently happening. We also could take a horizontal line and we could put it right here. Why? Because we have a bunch of wicks right here telling us that the market was having a hard time getting past that place. So we can currently see that the market is in this. Oh, that's a little big. We can see that the market is in this range, right? Is ranging. Now, whether the market is going to buy or sell, we're going to want to pay attention to what's going to happen in the next 13 minutes, right? Is the market going to break structure, right? So that we can continue for a buy, or is the market going to drop down? And sometimes with trading, it's a waiting game. You really do have to wait. But what would you say? And you guys can guess. You may be right. You may be wrong. None of us ever truly know what's going to happen in the market. But based on what we're seeing right now, would you say that the next thing that the market was going to do is buy or sell, right? What would you think that it was going to do? And we don't have any indicators yet. This is still market structure. No wrong answers. All right, you guys don't know. You guys do know. Buy. Okay. And you're saying it's going to buy because what are your, you can unmute yourself if you want as well, or you can just drop it in the chat. What would make you think the market is going to buy? Broke structure. Okay. Yeah. Okay. Yep. Yep. So it looks like the market can push past this previous high. That's another reason that the market could potentially buy as well. We do have higher highs being created. We see that there was this high, then we see that there's this high. So the next thing, if this market were to continue to buy, and for us to confirm that the trend is going to go that way, we would need this current candle to close above this previous high to know that higher highs are being created, right? And another thing, if you guys remember what we talked about last week, if you see that the market, if there's some liquidity over here, right? That's another name for if you see a bunch of wicks, that's liquidity. The market is always, the banks really, because we're retail traders, but the banks are always going to come in and clean these people up, right? They know that if you got into a trade right here for a sell, right? Because remember, the market did sell here. The bankers know if you got into a market, if you got into a trade for a sell right here, they know that your stop loss is going to be right here, right? Your stop loss is just, okay, I'm in for a sell, but if the market reverses and goes the other way, I don't want to lose too much money. So we literally want to stop our losses. That's what stop loss stands for. They know that your stop loss is going to be right there. Now, what the bankers are going to do, they're going to come through on this candle. This candle most likely will go up, and it's going to be higher than this high, taking out everybody that was in this trade if they didn't get their profits yet. So we can say that this may potentially break on the upside, right? Just based on market structure alone is really not that hard. Based on liquidity, this market can shoot up, be a little bit higher than this high right here, and then drop back down, because that's typically what happens. It'll shoot up and then it'll drop back down. Or if we look at it another way, we can say that the market is very liquid right here and it could potentially sell, right? So we understand the concept of market structure, but now that's why we need our indicators to confirm what are we seeing, right? It could buy, it could sell. It's only two things that it can do, but how can we confirm what we're seeing? And we use our indicators for that. So we are going to use 3 indicators today just to give you a little bit more insight into, because it can be confusing. You may be like, I don't know. Now would like it could sell. Yes, it's always maybe a little bit confusing unless you have things to affirm what you're saying. So if you were on the HFX session last week, you know that we really talked about EMAs. So we are going to use EMAs for this strategy as well. But when it comes to trading, there are 3 types of indicators that you need to understand, right? You need to understand your trend. What is the overall trend of the market? Is this market overall pushing up? Is this market overall pushing down? You need to understand sell is it's definitely a good answer. I probably would, me personally, I probably would set a sell limit at the previous high, because I know that if I sold right here, I know that it's going to bounce up, wipe out these people, and then come back down. So overall, I would think it would be a sell, but it probably going to buy a little bit. But is it really risk? Is it really worth it to go from here to there for a sell, or is it better to set a sell limit? Sell limit. That's the direction I would go. But I'll explain why. So again, you need the EMAs to tell you the trend. EMA stands for exponential moving average, and it's always nice to have 2 EMAs. So for this lesson, we're going to use the 50 EMA, and we're also going to use the 20 EMA, right? We're going to use the 50 EMA, and we're going to use the 20 EMA, because this is going to tell us the overall trend of the market. Again, EMA stands for exponential moving average, and it tells you the average place of where price was at for the last 20 or 50 candles, whatever you select. So how do you get here? You go to indicators, right? Now with the free version of TradingView, you can have up to 3 indicators, but perfect for you, this strategy only has 3. If you want to get the paid version of TradingView, it's completely up to you, but you will have access to more indicators, but you don't need a lot. You need to understand something that's going to show you the trend, something that's going to show you the momentum, and something that's going to show you the volume. Plain and simple. So you click indicators, you type in EMA, it'll come up moving average exponential. Once you click on it, it'll pop onto your chart and it'll look something like this. Now you can go into your settings, of course, and you're going to want to change the length. The first EMA, you're going to want to change the length to 50. This means that over the last 50 candles was priced above average or was priced below average. That's all that's telling you. And you want to change this to EMA so that it's exponential. The style, you can make it whatever color you want, just so that it doesn't clash with other colors on your screen. And then you can make it a little bit thicker so that you actually can see it. And you just want to do the same thing twice, but this time you want to put, you can either use the 200 EMA or the 20, whatever. Just put a second EMA up there, but I'm using 20. So we're going to use the 20 to 50, change it to EMA, change the style, and click OK. Now, what EMAs tell you pretty much is it's simple. And I'm going to scroll back on the chart. Let me delete this too. Again, EMAs will tell you if the price is above average or below average. So what you'll notice is that if the candles are above both of the EMAs, you should probably focus on taking buy opportunities, right? And if the candles are below the EMAs, you're only going to want to focus on sales. So I'll just scroll back a lot or a little so that you guys can see this, right? And if you guys can see that when the candles are above the EMA, they tend to buy. And when they're below the EMAs, they tend to sell, right? Just drop some sevens in the chat, right? Because this is also going to help you with entry points, right? If the market is trending down and you can visually see it and you know that the average is low, why would you go for a buy? Granted, yeah, you can get into it. Let's just say you got in right here. You was like, I don't know what to do. Should I buy or should I sell? And you didn't have your EMAs on, right? And you decided that you wanted to get in for a buy right here. You would definitely get stopped out because the market is in a selling trend. Yes, we had a little push up, but you could have gotten so much more value out of the trade by taking the trade with the trend, hashtag trade with the trend. And I'll just go back a little more, right? Because it's never going to fail. You'll have more opportunities to buy when the market is above the EMA, more opportunities to sell when the market is below the EMA. Simple, simple, simple. Now, another thing you need to know about the market is not only what is the trend, what is the momentum? How strong is this? How strong is this trend? Is it going to continue? Now, the simplest indicator that you can use for momentum is literally called momentum, right? It can't get more easier than that. So you're going to type in MOM, momentum will come up. You click it, it'll come up on the bottom of your screen and it'll look something like this, right? Now for your momentum settings, you can leave them exactly the same, or you can change the length to 5, which is going to give you a tighter snapshot of the data. I'm like, what am I trying to say right now? A tighter snapshot of the data. Now, when you're using the momentum indicator, and let me zoom in a little bit. When you're using the momentum indicator and you're looking for a buy, and let me get a vertical line just to show you how easy this is to see once you confirm what's going on with the trade. So let's look at this candle right here, right? Now, let's just say we would have gotten into the market before. Let's just say we would have gotten to a market before any of that would have happened, right? We would have said, okay, I see that I have a green candle. I see that it's forming above both of my EMAs. And I see that my momentum line is about to cross up over the 0 line, right? Because it's either going to be above 0 or below 0. If the momentum line is above 0, that's another confirmation for you to take the buy. So I'm going to press play, right? And we're going to look at what happens once we have all of our confirmations, right? The market continued to buy for that time, right? So we would have been able to take this trade, and let's say we would have only needed to get 20 pips because 20 pips is so small, right? In 1 hour, we would have gotten 20 pips. And if we would have risked $1 in our trade, that would have been $20. If we would have gotten to that same exact trade 2 times, we could have made $40. If we would have gotten to that same trade 3 times, we could have made $60 just based off of understanding that the market is above trend and the momentum is very high So there's a high likelihood that the market is going to go in our favor. So it's two ways that you can use the momentum indicator. You can stay in this trade, right? You can actually stay in this trade until, let me get my pencil. You can stay in this trade until you notice that the momentum is about to cross back down. And then I'm going to just get another vertical line. And we can see that once it crossed back down, wrong tool. We can see that once it crossed back down right here, what also happened at the same time, y'all, it started to sell, right? It started to sell. So we had our confirmations, green candle telling us the buyers are in control of the market, above both of the EMAs, telling us that price is above average and it's going to continue to go that way. And then we have a strong push up on the momentum line, which also confirms that this is going to be a great chance for a buy, right? So if that makes sense and you guys can see how and why we would have taken this trade for a buy, just drop some sevens in the chat, right? Because it gets easier the more you practice and the more you look at it. Now I'm going to go back and I'm going to show you another example for a sell, right? So for a sell, sorry, y'all, my candles just look so small. All right, there we go. So for a sell, it would be the opposite, right? For a sell, you would want to see a red candle, right? We got that. You will want to see that the red candle is below both EMAs, telling you that price is below average and is going to continue to sell. And then you will also want to see that your momentum line has crossed down or is below zero. It could be either or. Once you get the cross down, that's the beginning of the trend. So you can ride it out. You literally can ride out the trend. And this is one reason why I do like using this indicator. If you got in here, if you got in on this candle, or you can even take it back and you can get in on this candle or even this candle, right? But let's focus on this candle. If we would have gotten on this candle for the sell, you literally could have stayed in this trade, right? Until you see that the line starts to cross back up. And then even if you wanted to get out of that trade and just set your take profit there from here, I'm just trying to see how many pips that is from here. It says I'm breaking up, y'all. If I'm breaking up, drop some fours in the chat. But if I'm okay, just drop some eights. Okay, I got some fours. I'll wait. All right, thank you, Spicy. All right, seems better. Okay, perfect. So let's just say, and I need another vertical line just to know where to get out. Well, you really could have got out anywhere. So let's just say we were going to focus on this section. We have our red candle. We have it below both EMAs. We have our momentum line under zero. Because remember, it could be crossing down, but as long as it's under zero and the candles are under the EMAs, you're in the clear for that trade. Again, you can stay in that trade until the line crosses back up, or you can just get your pips and you could be out. So let's just see how many we would have gotten this trade. Right? So in 3 hours and 15 minutes, that would have been 38 pips. That could be $3.80. That could be $38. That can be whatever 38 times 2 is, right? You can make that money in that time. So I'm just going to scroll back on my chart just so that you guys can see examples of that. And I really just want you to pay attention to whether the candles are above or below the EMA. Also, when you look at those candles, let me know if the momentum is above or below and if it makes sense. Well, don't let me know, but let me know if you see what I mean. And if it makes sense, you can just drop an MS in the chat because you can do this on any time frame, the 15-minute, the hour, the daily, right? If it's above zero and above the EMAs, go for that buy. I would say 15 or 20 pips is a good place to start, right? Because let's look here. Even if we did 15 pips, that's so small. You can get 15 pips in 1 hour simply because the market is trending up, right? Where is the market? I don't know why it's acting like that. Let me refresh it. But yeah, guys, it's pretty It's pretty simple to see. It's pretty simple to see. So I'm going to go ahead and just highlight some more examples for y'all. And then we just going to put everything together that we learned today. We're going to put the market structure together with the indicators. And then that's, again, going to help us set our TPs, and it's going to help us set our SLs for future trades. So again, I'm going to just scroll back. I'm going to find another example, right? Here's another example, right? We have, and I'll just circle it. We have the green candle. Well, actually, let's start from the beginning, right? Market was consolidating, right? We have, that's ugly. I'm so sorry, y'all. We have the market was consolidating, right? We see it was going whoop-de-doop-de-doop-doop, right? We see we have a break of structure on the upside, right? So that's one indicator, really two indicators we should go for the buy. So we got the break of structure. That's one, right? Not only do we have the break of structure, we also have the green candle trending above both EMAs, right? That's our second thing. Like, if we were back here in the market, should we get in for a buy? Should we get in for a sell? Third thing, we have the momentum line above 0. So we have all the confirmations that we need to enter into a trade. Now, these are the strict confirmations that I've started to trade with because it just makes sense. If I know that I need to understand the trend in the market, if I know that momentum is important, I'm going to use the strongest indicators that are going to tell me those things. And again, I can scroll back in the past and we can just find several examples of this. We can see an example of it for a sell right here. We can see the candles are below both EMAs. We can see a red candle, right? We can see the market was consolidating. We can see the market broke structure right here, right? We can see that the MOM line was also below 0. Everything we need for a sell. And again, remember, we don't need 1,000,000 pips. Let's say we only wanted to do 15 pips in a day, right? 15 pips in an hour and 15 minutes. Now, if you, again, the more money you have, that could have been $150 in an hour and 15 minutes. That could have been $1,500 just because you simply see a rectangle and some lines doing this, right? That's just always going to be the thing that gets me about trading, is that it's so simple. It actually, sometimes it seems like it's too good to be true. Like, it's so simple. And again, here's another example. Is if you go back and back test this, which I highly encourage you to do, it's going to become easy to see. We have the candle, right? Well, let's look at, it don't really matter, but let's look at this candle because it has all the confirmations. We have this candle right here, right? Above both EMAs. We see that there was some structure. We see structure was broken on the upside. That's signaling us for a buy. That's actually our entry signal. We see the MOM line above 0. And then again, if you only wanted to catch 15 pips, I will focus on that while you're learning, just to see that it's not a lot. And you can get that 15 pips in an hour, right? I'll just do one more sell example. It just doesn't get any more clearer than this. If you guys are seeing this, right, just drop some 3s in the chat, because I really want you to be able to identify this, whether you're on a live session or whether you're doing this on your own, right? It really gets simpler to see. We have structure, right? We have highs, equal highs. We have equal lows. We have this candle breaking structure on the downside, right? We have the candle falling under both of our EMAs. We have the MOM line below 0. And if we were only trying to get 15 pips, let's see how many pips we would have gotten. If we would have set our TP to 15 pips, TP would have been smacked. Now, could you re-enter this trade? Sure. Could you stay in the trade for longer? Sure. Right? What I like to do now is to set my risk to reward at 1 to 2. And this is another thing I learned too with trading. Like, the easiest way to set your stop loss is this, right? Because this still may be a thing that some people struggle with. Let's just say you got in for a sell here, right? If you're getting in for a sell, you want to set your stop loss where the previous high was, right? Because remember, if we're trading in a market that's trending down, we're expecting the market to be creating lower lows and lower highs, not higher highs. So it would be safe for us to say that my stop loss should be where the previous high was. So let's just say your previous high was 15 points above entry. You're going to want to set your TP 15 points below entry, right? Or even 30 points below, right? Or even 45, right? It just depends on, are you able to withstand the market noise, right? Because there was some noise here in the market. It was selling. There was some noise, but then it continued to sell. So if we're doing 15 SL, 15 stop loss, and 15 TP, that's called a 1-to-1. If we're doing a 15 pip stop loss and we're doing a 30 pip TP, that's called a 1-to-2, right? Because your risk is 1, but if you clear that trade, your reward is 2. If you're doing a 15 pip stop loss and you're doing a 45 point TP, that's called a 1-to-3 risk to reward ratio. And as you can see, if we would have used those parameters in this current trade right here, 15 pip stop loss, and we would have took this trade 45 points down, we would have hit our TP, right? Because we can see the market actually continue to sell. So it's not that hard, and it doesn't really have to be that hard. If you're going for a buy, of course, it's going to be the opposite. So let's just say we were getting in for a buy right here, right? And I'll just circle it. I personally just like drawing stuff on the chart, y'all. Sometimes I don't even need to. I just really love it, right? So let's just say we got into an entry right here. When we're going for a buy, our stop loss is going to be the previous low, right? So we think this market is going to go up, but even if it would have went down, right, that's still not that many points. Let's actually look at how many points it is from our entry to our stop loss, right? It's about 10 or 11 points, right? So if we were doing a 1-to-1, we would set our TP 10 points above, and let's just see if we would have hit that, right? And let me actually just use the tool for it. So let's just say we entered here, right? And we only set our TP for 10 points above. And we set our stop loss 10 points below, right? Clearly, if the market falls within our green, we would have taken a profit on that trade. Now let's just see how high this trade actually went, right? This trade actually went for a 1-to-6 risk to reward ratio, right? Simply because you know when to enter and you know when to exit the trade, it just automatically literally makes you a better trader, because that's what most people don't understand. They don't understand what they're looking at. They don't understand market structure. They think they have to be on the chart all day, every day to make money, when that's simply not true. All you have to do is know what you're looking for. And just a disclaimer, the market won't always give you exactly what you want. So when you see the perfect setup, this is perfect. Take your opportunity, right? If you see the perfect setup, this is perfect. Take your opportunity, right? If you see, and we'll just keep going, if you see a perfect opportunity, this has everything you need to enter that trade. Go for the opportunity. And we did talk about pending orders, where if the market is not quite at your entry point, you can just set a pending order. And I do have a video on pending orders that I can send you guys. I know Spicy is really, really, really good when it comes to pending orders. She's really great at identifying support resistance, supply and demand, and her trades will trigger and they will hit. So she's really taking advantage of that, and it's just been really helpful. So Spicy, I don't know if you're busy or if you can just speak on how understanding pending orders has really helped you with your trading for a minute or two. Just let me know if you can, or if you're busy, just let me know. Because we real life entrepreneurs out here. You should be able to unmute yourself if you have the time.
Hey everyone. Yo, I started cracking up.
Participation, we love it.
But yeah, I like pending orders, especially because now the the asset that I'm really trading right now is Bitcoin. So because I've been trading it for months now, almost a year, it's like I was able to set my support and resistance based on what the market has done before. So what I do is I'll just set a pending order and, for the most part, yeah, I like them because you can just be doing something else in your day, and then you're like, "Oh, let me go to MT4 really quick," and then you go, and then your trade is no longer there, and you're just like, "What happened to my trade?" And then you go to your history, and you realize that your trade has hit TP. So it's really nice to set the pending orders ahead of time because it kind of just triggers the trade automatically, and you don't really have to do much on the back end, but on the front end, you have to, look at the support and resistance and then set the pending orders up like that. So, that saying when people are like, you either pay on the front end or the back end. So it's kind of like that with pending orders. You do the work first and then you go back and you're like, oh, wow, it hit TP, which is amazing. Is there anything else you want me to talk about? That's just my own personal experience with pending orders.
Yeah, yeah. And I just wanted you to add that because it's like I've been teaching pending orders for years, but I only really took advantage of them with HFX. But you was a really person who made me be like, all right, let me just set my pending orders because I'm more of a because I come from an HFX mindset. I rather see my profits now. Like I'm just like I need to see this now. But in setting pending orders, it's like you know what you've analyzed. Like you already know what you've analyzed. You trust your trade and you don't have to be actively looking at your phone for that trade to trigger, for that trade to hit, for it to be in profit. You don't have to be present for that. And the whole purpose of being a trader, like you want this to be passive income. Like you want your time back, you want your freedom back, you want to make more money. So I just wanted you to speak on it because it's been helpful for you. It's something you actually use in your day-to-day trading and you've seen the benefits of it, like understanding why you should be able to do that. So thank you, Miss Spicy. So, yeah, Spicy she's a long-term friend, long-term trader. She started her trading journey in, I believe, 2021. She was also able to leave her job because of this opportunity. She is now a full-time entrepreneur. You guys should definitely make sure that you follow her on Instagram. I'll drop her name in the chat as well, just so that you can really see, when you take something seriously, how your life could really, really, really change. So to go from doing this thing to now being able to do your own thing full time is like you have more time to spend with your family, you have more time to put into your creative projects. It really helps. And I want you guys to understand how you don't have to spend all day on the charts. You just have to understand you just have to understand a few fundamental things. You have to find some indicators that work for you. And you really just got to be patient. You just really got to be patient with the process. So yeah, that's really all I'm gonna teach you guys for today. However, just because we are looking at Euro USD, I am going to see if we can find a trade for a pending order just based on what we're seeing. We can all enter this trade together, or you guys can stay on the charts to do some more back testing and enter any trades opportunities that you see. But I'm gonna just take this down to the 5 minute and see if we see anything. Um, if we see anything. So some things I am noticing, and this is literally how I trade, and we can see it happening in real time. We can literally see that this market, just looking at it overall, if we were to zoom out, right, we can see overall this market is on a, why is this ugly like this? All right, there we go. We can see that this market is clearly on an uptrend, right? We can clearly see that it's an uptrend. We can also see that the market right now we can see that the market right now is coming down close back to this support line because the EMAs can also be used as support and resistance if you haven't noticed just by looking at the chart. So we can see that the market in the MOM, we can see that it's currently below zero, but doesn't it look like it's about to cross back up, right? It looks like it's about to cross back up. So this is giving all of the signals that we can probably set a pending order for a buy. Now, if you aren't familiar with pending orders are, again, you're doing the work now, right, to set up the trade to trigger at a later time. So if we were to, let me see how much, is this even worth it? Because it's not always a trade opportunity for you to take. So you have two options. Now, we know that the market currently is ranging, right? In order for us to confirm this for a buy, we would want this current candle to break structure on the upside right there, but we can still set a pending order for a buy at this line, right? Or we can even set a pending order because it's not that far from 32 to, when did this trend start? When did it cross up? right there. Right. So we can see that this uptrend really started around here. So we could set a pending order around there so that when the market comes back down, right? It looks like, let's see, we'll see in real time. Is it going to break structure, right? We'll see. It's trying, right? And that's why it's not good to sit there and watch a trade because you'll be like, structure. That's why it's like, you see what you see. If that's happening, just let it happen. And we're going to set a pending trade. So the pending order I would take for this trade, right? It would potentially be, and this is potential. You don't have to take this trade, but I will take it in my demo so we can see if what we're learning is correct. I will set my pending order at 1.07, and this will be a buy limit order. 1.07235 because we expecting the market to touch that point, and then we are expecting it after it comes back down first. We do expect it to go back up and then to break the bigger structure and create a new high. So we could potentially set our TP at 1.07. I'll just say 370, right? So that's about 15 pips, right? And then your stop loss, of course, would be under the last lowest low, which is about right there. But I probably would do 10 pips. So I'll probably come down a little bit just to be safe. So 1.07142, 1.07142. So that's a potential trade idea you could take. Or like Spicy was saying, she says she will be looking for a sell. We also know that the market will probably break this high, right? Then we know that the market will probably come back up to this line and then sell back down to this line. So you can create a sell limit, right? And I'll drop that in the chat as well. And again, these are just trade ideas based on what we learned today. You don't have to take them. You can set it'll just be backwards. You'll set your sell limit at 1.07370 and then set your TP at no, you can definitely trade MetaTrader 4 on your laptop. But I was looking it up recently and they said that there's a way that you can re-download it if you've had it before. So 1.07 TP will be 1.07. Or we could just find another platform for you to trade with, because it's as long as you can get into the market. MetaTrader 4 really just came out, I think, like 2011. So as long as you can find something to trade on, you should be fine. But they do have a web thing too. So that's really all I have for you guys today. My intention with this class was to go a little bit more deeper into market structure, and was to give you guys some indicators that are very direct with what we were talking about. So if you guys do have any questions at this time, you can just feel free to unmute yourself or drop it in the chat. I'll give you guys about 30 seconds to ask any questions or something that you need me to repeat, go over, or something that you need more clarity on. But if not, we can wrap it up and call today a day.
I have a question.
Yes.
For the momentum indicator on MT4, how, like, I put it up on MT4, but I don't see that dotted line, which says, like, I guess it's supposed to tell you if it's above 0 or not.
Okay.
What would the settings be on MT4?
For the settings, let me tell you right now. 1 second. Because I had to like customize mine to get it to be that way. But 1 second. Momentum. So basically, you would want to keep the oversold and overbought levels, and then you would want to add the mid level. You want to add 50 where it says overbought, oversold, and mid. You want to put 50 right there. Do you see it?
Yeah, I only see parameters. It says like parameters, period, apply to styles and level.
Yeah, so levels. Do you see levels 80 and 20 or no levels?
Oh, I don't see levels. It just says style. I don't know. That's weird.
I don't know. I thought you said you saw levels.
Yeah, I do, but I can't edit it. When I click it, it doesn't edit.
So what
Oh,
can you edit?
actually, never mind. I have to add it. So you
Okay.
said, what are the numbers?
Well, you only really need the 50 level, but on the iPhone, it comes with level 80, level 20, and then level 50. So just add level 50 and let me know if the line pops up on your thing.
Okay, let me see. Yeah, it didn't pop up, but I could ask you later just so I'm not taking up time.
Yeah, you probably would have to share your screen so I could walk you through it because mine's is my camera on? Because mine's is like this. So I basically had to add a horizontal line and I had to set the settings so that the horizontal line appear on all charts and stays at 50 just so I can use that indicator. So I did have to modify it a little bit. So I'll definitely help you with that. But as y'all can see, this trade, as predicted, is sold. Is most likely going to reach our buy limit area. It's going to come down to that area, then it's going to come back up. So all is well in love and forex. But that's really all I got for you guys. Got for you today, folks. I'm here. If you guys do take any trades throughout the week, and you need me to help you understand why the trade went wrong or why the trade went right, I'm here. Trade breakdowns are a part of your mentorship. And if you haven't taken advantage of your one-on-one session yet, that also comes with your plan, please just reach out to me because I got time. But yeah, that's it. I love y'all, and I will send y'all this video as soon as it gets to my email, and I will see y'all actually tomorrow. So you're welcome. You're welcome. Yeah, that's it. That's all for now. Let me stop.